What's poppin' YouTube? It's Maximus the Forex Trader. And we're back with this week's recap. Sunday, Monday, October 11th to Friday, October 15th. This week was alright. I did okay. I made profit. But not that much. It's alright. Only because I got out the trades too early. I panic closed. You get me? That's why when you study your system, you gotta be very sure that you believe in your system, so that way you never second guess it. You don't doubt it. You got me? Wait one moment. So we're gonna start off with euro dollar. Um, I won this trade. We won this trade right here. So basically, we had one hit to the low, up to the high, one hit to the second hit to the high, three hits to the high. Inverted hammer. We took that going low. I'm pretty sure we won that trade. So the thing with euro dollar that it's in level 3, you got me? It's already been the this was coming off level 3, level 1, level 2, and then level 3. And what level 3 what can happen is you can trade both ways, you got me? So the week open, we knew we was in level 3, so we know we could trade up and down. So we have a resistance from last week. We have resistance from last week. It hit it twice. Then you could put a pending order for it to go around there 3 times, and we did that and took it going low. You got me? But the thing is, you gotta realize that we're level 3, so you can trade going up. So once you see previous wicks on support at level 3, that's like your left shoulder, because for a full level to shift most of the time from level 3 or peak formation level 3, there gotta be a left and head and right shoulder most of the time. So we seen Doji on the first leg of last week going up to support, Doji again to this week to support. So you go in for the right leg. This is a little hard to trade, but I forgot what it's called, but my mentor taught me it. It's when the dealer pulls back on level 3 for the right shoulder. He throws you like a wick candle that you can take it going up for the right shoulder. Boom, and you would have won that. And then going up, you would apply the resistance, because you could apply support and resistance in level 3. So the dealer shifted up. We're looking for a pullback. Nothing too crazy for a second pullback. Then you could have took that going up right here after this candle, because that's basically a W. You got me? A calm W, like 2-3 hits to the low. Yeah, 2-3 hits to the low. And take it going high, but you would have to gotten out around this candle. Only because of slow momentum. The momentum is slowed down. So you would have had to get out, and that's why you would have traded euro that week. Basically, level 3, you can trade both ways. Now we got dollar CAD. Dollar CAD was in an overall downtrend, so we was looking for a stop point high drop. We had the red retail traded trend line. You got me? That's what we had that for. So this is how you would trade it. You wait for the dealer to show you his hand. He opened low. He went up. That's what we're looking for. Stop point high. He touched the retail traded trend line, closing it calm. No wick candles to the high side. You got me? Just moving smoothly around us. What you're looking for is like a double doji or a second leg M. You got me? And boom, right here, your second doji. You waited for the next candle. 5 wick stop hunt wick, and then you would have took it going low, and you would have won that. You would have won that trade. You got me? So for your next trade, so this all confirms that you're in a downtrend, right? And then right here, okay, we had a shift low, a little pullback, a shift. That just, well, let me explain this again. The next trade. So right, we won this trade because the dealer stop went to high to retail traded trend line, resistance. He slowed the momentum. Gave you half a shift, and then M formation with a sometimes it's always going to be double doji, but as long as the dealer's not closing above retail traded trend line, you can take it going down. And we did that on the next candle after we seen this doji. We took this trade going down, and then we're starting to notice that a lot of resistance. So okay, he's gonna shift, right? And we would have went on 45 pips by now. So we're looking for another trade. So once you've seen the dealer shift down, basically confirming more our selling bias, that you want to pull back for a little retest, and it could be a doji shift and then a little doji again. But look at this Greystone doji. Greystone doji basically they signify more trade trend going down. This right here, and you could take on the next candle right here, and that's how you would have won your 45 pips that week. You get me? Two times. There was only two trades on dollar cat. That's why it's important to be patient and wait for the best trades, because most of the time you're only gonna get 2 or 3 trades per week per pair. So Australian New Zealand, you can see we had a 3 level rise, 1 2 3. So especially above the 800. So what you would do is you would draw your retail traded trend line right here. Wait for the dealer to break up right to the 800. Go to the retail traded trend line. Um, like yeah, it's cool. But the thing is, you want the dealer to throw you wicks. You get me? To throw you wicks at retail trader trend line, especially at resistance. Throw you wicks because it a because this could be a false M, calm M, doji second leg M. You get me? You want him to wick up high, pin high, and then drop low. So we're not really buying it until we seen a shift. We could probably he probably could have shifted low and then come back up for a pullback and then take it low again. But we're just waiting. So once we seen this doji candle at resistance level 3 for a sell, then you can take that going low on the next candle, and you would have won that trade. You get me? You would have won that for 45 pips. So now we're waiting. Um, we see a M formation, basically more M formations on level 3, because you could trade going up and down, but in all reality, it's supposed to take it going down because there's already a lot of buys. So we've seen this M with all these wicks to the high side. You get me? No strong shift bars. Um, First leg of the M, second leg, and then you wait a few. You wait like five. You wait for 15 minutes to see if you see a wick candle. Then you could have taken that low again. You get me? Boom, 45. And then the dealer later in the week, he broke support, box level support, shifted through 800, pullback, he pinned resistance and the retail trader trend line going back down. That you take it, and you see a doji, basically a last kiss. These are last kisses trades for a sell. Then you take that going short. That's how you would have won that. That would have been an easy last kiss trade. um then we have pound Australian. um did I take this trade? Oh yeah, well, I took this trade, but we had to cut it out short. It was all right. It wasn't nothing too crazy. Like, we kind of knew we would. Well, we were in a downtrend basically, because let me do this. The boxes, boom. The dealer didn't pass the 200, especially above the 800, and then we had like another box right here. Um, Dealer broke support, came back to retest of resistance and made a box. That's how you make boxes. But we're not talking about that in this video. I'm teaching more how to do boxes on the another video. So we're in a downtrend. We plotted our red retail trader support trend line, and then the dealer, he opened low, right? Basically kind of opposite what we was looking for. Um he opened low. He broke 800. You know what I'm saying? Throw you some dojis, and then he throw you an inverted hammer. Then you could take that going low on the next candle. But you gotta be careful, because if the dealer gives you a signal and then shifts, but then he don't shift, throw you dojis, especially at support, that you can get out. You gotta get out. Let me see. Oh no, you would have got your 45 pips in that one candle. So that's good. So now that we know we're in a downtrend, right? The dealer late in the week, he came to resistance of a previous stop hunt, resistance to the 800 and the retail trader trend line, and we're in a sell position, and he's closing clean with shift bars closing clean, like no extra movements above, leaving you no wicks. Basically, just once it close back down low, then you take it on the next candle going short. You get me? You take it going short right here. And let me see if you would have grabbed your 45 pips off of it. Yeah, you would have got your 45 pips. Now, the dealer, he shifted, but he's pulling back. You get me? You're seeing lots of dojis. You see all these lots of dojis to the stop hunt high. And then you got a greystone. You could put a pending order and then take it going low. You feel me? Then you would have that's how you would have won that trade too. Sometimes keep watching these videos, these recaps, and you're gonna see where to put your pending orders a lot. So now we have Australian dollar. There was only there was three trades, right? We were in the uptrend. We was in the uptrend, basically. Let me see something. So the dealer, he opened up long, but we're looking for a pullback. So this is our first pullback right here. This doji candle. So we marked it. We marked support, but then we saw that he came back and then he closed clean because it could be a W. It may look like a false M, but it's really a W as a pullback. You get me? Like W pattern, false M. You could say so. They you could take that on the next leg. You get me? You could take that on the next leg. This trade, and you would have won that. You would have won that. You get me? I think I might have closed early, but if you see the dealer shifting back a little bit, then get out early. But this trade we took early right here. We was in this trade, and it turned out so well. Like yeah, this is like the fourth hit. We put a pending order, but there was a retail trader trend line that the dealer had to stop on a little bit. That's what I say. We gotta fight our trade sometimes. So we gotta hang in there. You get me? Sometimes those 12 to 15 pips, because you never know if it's gonna win or not. You get me? So next week we're gonna start fighting because if we know, we know. Like you get me? Like that's all the whole point of the stop loss. So then we had like a false shift candle, and then the dealer shifted up. Um, had a little pullback. Inverted hammer. That's why I teach you. No, not inverted hammer. Regular hammer. The hammers to trade going up are a little bit difficult. You gotta wait for the dealer to shift first, a little slow momentum, pull back, and then give you hammer. Then you take it on the next candle. You get me? Like inverted hammer selling is a little bit easier, but hammer going up is hard. So yeah, that's how you would have won that trade this week. We'll go to Swiss JPY. Swiss JPY, we lost it. Honestly, it was a win, but we lost it because of the gap, basically, you know what I'm saying? And kind of a little bit impatient. So basically what happened was I knew that we was in a buy, you get me? Because we're in level 3 now. But this happened level 2. We had retail trader trend line. We had resistance at top. The dealer had a false M, right? Don't want to shift, like double dojis and stuff. Then you could have taken that going long. But the only thing is, if you saw, like, you could have took it going long around here, this candle. But if you see him just dojing and dojing for a long time, then you can get out. But we would have had a 12 pip stop loss rate if we would have got in right here or right here. Let me see something. No, it wouldn't got stopped out. But if you see him just gapping too much, taking too long, then you could just get out and wait for a next shift. Wait for a next shift. So this trade right here, this is how you would trade this. We're level 3, right? But it don't matter. He can push up more. So the dealer, he broke support. I mean, he broke resistance, right? Pushed up. Throw you like a wick candle to resistance trend line. Shifted more and then shifted more. You could have took it going up. took it going up. When he didn't he shifted up, throw you kind of like an inverted hammer, but then he shifts back up strong. Sorry, I'm parched. Um, you could have you could have traded that going long basically and won that trade, and then later in the week you probably we could have had another trade to win because around this area the dealer shifted up, so we're like, okay, we're kind of in an uptrend. The dealer wants to push level 3 more, so he pulled back, one hit, two hit, basically a three hit clean hit, a pullback, right? One and then two hit closing above the support clean, the support red, this white line, this white line. Um, then you could have taken that trade on the next candle going up. Feel me? That's how you would have won that trade. And then last but not least, Australian Swiss. Um, we was in an uptrend. We was in an uptrend. Yeah, we was in an uptrend. The dealer locked above the 200 and 50, and so we had a new week. The dealer pushed up. He went to the 800, but that don't mean nothing. You know what I'm saying? We're waiting for something here. We saw rejection, like we saw him try to break the 800, but then closing back above the 800, so that just signifies more buy trend. So he pins above the 800 with the 250 lock, basically. So makes it, yeah, so more buy, but we gotta wait. So we start seeing a pullback, right? We start seeing a pullback. Um, okay, we see one hit, two hit, and then like dojis closing, like small dojis closing above the 800 EMA. Then you could have took that going up, basically. Especially like the hammer candle. You wait for the dealer to try to come back down at least a little bit more from there. Then you put your 12 pip stop loss. Boom. You could have took that going up. That's how you would have won that trade. You would have won that trade, basically. Yeah, there was only like one trade for Australian Swiss. Like it could have been two around here if the dealer like kind of like stopped hunt low and then went off for false M around here, but it was already at the end of the week. So yeah, that's how we would have traded this